Hey guys, welcome back to the channel. Today I'm going to be providing an extensive analysis on Bitcoin and its current market cycle. And I'll be looking at and comparing the bear markets, the ROIs, timeframes, and my general outlook behind these market cycles and where we potentially are today. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, this channel is sponsored by ftx.us, which you can check out in the link in the description below. So I'm going to start off here with this chart where I have all four different market cycles indexed to the same day and to the same price. And the way I'm measuring these market cycles is I'm measuring from one bear market low to the next. Now, to help visualize this chart, I'm just going to add the price frame on the top, and then I'm going to switch the time frame so that we can see the entire history of Bitcoin in all four different market cycles. And you can see that each individual price line here down at the bottom has the same color as the oval for the market cycle it represents. So this red line right here represents this market cycle of 2010 2011. The yellow line is the market cycle of 2012 to 2014. The green one is the 2015 to the 2018 cycle, and then the blue one is that 2018 bear market low to where we are today. Now, I will say that for the way I've grouped these, some people do consider this red cycle and the yellow cycle to be all just one big cycle, measuring it basically from inception to this bear market bottom in 2015, which I think is a perfectly fine way of looking at it, and I think that is definitely something that you can consider. But for today's video, I will be dividing and grouping these into two different market cycles, mainly because this move right here in 2011 was just such a significant drawdown. Bitcoin basically declined 90% over this period, and I think that is definitely enough to reset sentiment and end a cycle, even if it wasn't that long of a bear market. So with that being said, let's go back and focus on this bottom frame, and I'm going to switch the time frame back over to a daily, just so that we can get a little bit better of a view here. Okay, so the first thing I want to focus here on is time. And what I'm going to be doing here is I'm going to be looking at this current cycle and the length of the bull market with respect to the previous cycle. So the previous cycle was again the 2017-2018 cycle. That was in the green. And if we take a measure move here, from the bottom to the peak, it was a measure of 1,036 days. And for this cycle, from the bottom back in December of 2018 to that November 2021 peak, it was about 1,059 days. So they were fairly similar in terms of the length of the bull market. And if the two bull markets were similar in length, maybe the two bear markets will be. So if we're just taking a measure move here from the peak of the previous cycle to the next bottom, it was around 364 days, so approximately 1 year. Now, if we're looking at where we are today, we're currently about 316 days into the bear market if the bottom is not in. And if we were to go out 365 days, again, that would be around 50 more days until we do experience our low, which would take us right into the beginning of November. Now, if we look at the 2015 cycle, we can take a measure move as well. This bear market lasted around 406 days, so a little bit over a year. And by both of these measures, there is an argument to be made that we do have a little bit longer to go before experiencing a bear market low or a cycle low. Now, this does not have to be a bearish thing. It could just mean that maybe Bitcoin consolidates and goes sideways for a little longer, which I think is a very reasonable expectation. I really don't see anything extremely bullish that could have a huge price catalyst for, Bitcoin and the rest of the market. And again, if we just have a little bit more consolidation, that's perfectly fine. That would just be a great longer term base where we have accumulation happening and we're just sideways within this range, anywhere from 18 to say 25K. And that's something that really could conclude the bear market, where as we had distribution on the upside, we could just have accumulation on the downside, where we have coins really starting to shift hands from some of those people who got in, say, towards the top of the market cycle into the more patient and long-term investors. Now, this is just one way to measure it. And as I said, this is basically measuring and indexing everything from the bottoms so that we can align them and just look at the entire market cycle. But right now, I'm actually going to switch this over here. And what I want to do is measure instead from the bottoms, I want to measure from the peaks. So I'm going to switch this over here, and there we go. So now I'm just going to zoom in here and just show you guys how, again, this is what I'm trying to do. I'm trying to align all the peaks to the same day, to the same price, so we can look at these bear markets and basically just get an idea of how this current bear market is comparing to the others. So this current bear market is the one in orange. You can see that we are right here. And actually, it's very similarly following the blue line, which is the 2015 bear market cycle. You can also see it's pretty similar to the yellow. The only outlier here seems to be the earlier on bear market of 2010 and 2011. And the reason this is because Bitcoin was really young back in those days. It had such high volatility. You can see to the upside and to the downside, the moves were just far more aggressive. So one of the things that might be appropriate here is just toggling off that market cycle back from 2010 and 2011. And one of the arguments there is that the 2010 and 2011 cycle was just far too young and far too early on in Bitcoin's market history, that it's really hard to use that data to our advantage because of how volatile it was. There really weren't many exchanges back then, all that kind of stuff. So we're just going to be looking at this current bear market with respect to the 2015 bear market, that's the one in blue, and then the 2018 bear market, that's the one in yellow. And you can see that it has been having a pretty similar trajectory to the downside. We are basically right on the verge of our final leg down if we're comparing it to the previous two bear markets. Now, I certainly don't believe that we have to have another leg down lower. In fact, I think that from the current price action, we do have some sort of established base, established range, where if the lows hold, this could be a very logical place for a bottom, especially considering all of the events we've seen. We've had a lot of minor capitulation. We had forced liquidations, forced selling by major funds, a lot of institutions like Tesla liquidating a large portion of their Bitcoin, altcoins down in that 95-99% correction. We've seen everything that we need to see in terms of a bottom, but if we are comparing it to the previous two cycles, this cycle could have in store for us another final leg down lower. But regardless though, if we do have another leg down lower, this graph along with the one in the beginning of the video both do seem to suggest that we do have a little bit longer to go before we can really start to say that the longer term bear market has ended. This one, again, it looks like we do have a few more months taking us into the end of the year. And I think that that is a very reasonable expectation to have. And that could look like, again, just consolidating and going sideways, really just grinding out through this range that we've established from 18 to 25K. And that would be a great sign because that would represent all the accumulation and the shifting of coins into those long-term investors. So now I want to switch over here to a different measurement. And what I'm going to do here is instead of measuring the peak from the November 2021 top, I want to measure it from the April peak. Now, the reason that this might be an appropriate measurement is because if you remember back to April of 2021, that was really when the sentiment actually peaked. That was when a lot of technical indicators peaked as well, like the RSI. That was when Bitcoin was the most overbought. This peak in November 2021, while it did correspond to the all-time high in terms of price, it was much more subtle. A lot of people had left the crypto space. They hadn't really come back for this next peak. So I think that this is also a logical level that we can actually measure from. And by this measurement, that really does sort of contradict the other ones that we were talking about. This one says, well, hey, we've been in a bear market ever since April 2021, and this has definitely been long enough. And I can definitely see the argument to be made for both cases. To me, it really does seem that sentiment has been in a decline ever since April of 2021. And by that measure, maybe we have been in a bear market long enough. So I think there's a lot of takeaways I have with these graphs. But for me, when I'm looking at Bitcoin at $20,000 down over 70% from its all-time high, I really do start to consider that longer term, this does look like a great accumulation spot. Whether we do have another leg down lower towards the end of the year or not, I still think that accumulating Bitcoin at 20K for a long-term perspective, if you have patience, it seems like a great opportunity. It's not financial advice. Again, you've been presented with all the graphs, so feel free to make your own conclusions. And please do, and leave them in the comments below so we can talk about it, because I really do appreciate those productive discussions. As always, I hope you guys enjoyed the content and the analysis. By the way, make sure to check out our sponsors in the link in the description below. We're partnered with FTX.us, and if you sign up through my link in the description below or through my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees over at FTX.us. As always, I hope you enjoyed, and I'll see you in the next one.